Hello everyone, this is Evan here from the Trade Risk on Wednesday, August 10th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now we're going to jump right into things today. S&P 500, the SPY ETF, closed down 25 basis points here on Wednesday, and that is exactly how much we are down this week. So let's take a look at where we came from. Monday, we started off the week right here. We made new intraday all-time highs in the SPY. And then we closed lower. Tuesday, new all-time highs in the SPY and closed lower. Wednesday, opened in the middle of the range and then of this week's range, and then proceeded to kind of sell off a bit, retest this old breakout level. Bulls stepped in just a little bit here off of the lows on Wednesday's session, but we still finished down 25 basis points. The key things to note here are ranges are really tight right now. Volatility is low, and we're just crawling and mulling around intraday. It's extremely boring. But we are still holding above this prior 16-day consolidation that we put in the SPY throughout the better part of July. That's constructive. I think as long as we can hold above 217, and I understand that's only 64 cents away, but 64 cents in this type of environment is actually quite a distance. So as long as we're above 217 and not closing back into this range, I would certainly still give the benefit of the doubt to the bulls, to the buyers right here. They do still have the wee bit of momentum on their side. The trend is still higher, but understand that we could easily come back down here, follow through tomorrow, and then start mulling around in this wider range, and perhaps that's where August is going to be, is just this chop fest of sideways low volatility until we see some type of catalyst emerge. So I think right now the bulls still get the benefit of the doubt. Internals very mixed, although the new highs list is still kind of impressive and still continuing higher. There's still a good amount of names out there making new highs. Advanced decline line is more of a mixed bag, but still trending in the right direction overall. I think if anything, it's just showing a lack of momentum, which really is not too much of a surprise, all things considered. If we go to the weekly time frame, you can see we're still here, of course, inches away from new all-time highs. We've been making them Monday and Tuesday. We didn't make them this day on Wednesday, but we're still here looking real good, looking strong on any of those larger time frames. So the way I'm looking at it is still just constructive, glass half full. I think you don't have to be all in here. We're certainly not, but we do want to still be involved to look for those stocks that are leading. It's the same MO that we've basically been talking about, is trying to stick with some of the leading names, some of the sectors and individual stocks that are acting well and actually breaking out and leading this market, and avoiding those that aren't. Again, ranges are tight, and I think you just need to respect that, and that's sort of the way we've been playing it. So if we go to some of the other indices here, IWM, also kind of similar situation, more of a sell-off today, 72 basis points to the downside, but still, look, coming into the 8-period EMA, so it's still holding up. It's still grinding higher here, but we're clearly, failing to hold on to that upper-level momentum. But whether or not we completely roll over here, or if it's a buying opportunity, I'm not sure. Nobody's going to know that answer for sure. We're just going to have to wait and see. But again, it's still a healthy, broader landscape that we're trading in, and the Qs very similar here. Even with today's sell-off, still nicely, comfortably above the 8-period EMA. So still a lot of strength here. And the key is, and this is what I've sort of been telling members, that there's not a lot of movement, and exactly for that reason, there's just not a lot of opportunity when you shouldn't be doing much, right? We're certainly not. We put on our first trade today for the week, but we've been quiet and just kind of managing what we have on, trying not to get too involved, and just kind of letting the market, eventually kind of get to where it wants to go, but not staring at markets while they're just doing nothing, because you can drive yourself insane, and it's just really not worth it in this type of environment. So focus on when there's opportunity for swing trading. Again, there's names under the hood that are moving, but you want to certainly pick your spots and not get too tied up with this market. If we go to some of the individual or other major indices here, TLT starting to shape back up. It successfully held this support yet again at the beginning of this week on Monday. You can see we did kind of undercut this area, but then we did close strongly, and we've seen 2 follow days higher. You could probably draw this nice little trend line extending down from these recent highs, and you can see that we're bumping up against it now. So TLT once again could be turning into just another healthy bullish consolidation here if we can get some follow through, particularly get through this prior pivot. Could start to look real good again. I like TLT, not involved in it, but I do like it still. If we look at gold, got a little bit of a bid today, still just consolidating here in this larger range. You can see needs more time in my opinion, flat kind of 8 and 20 period. Let it kind of get to the top end of this range or just base out a bit more, consolidate a bit more. I think there could be something interesting in the near future. Silver coming back to the top end of the range. Same thing as gold though, just consolidating, give it a little more time. Nice day today, but still flat kind of 8 and 20. Let's just wait for those to get a little more pep in their step. Might get something there. If we look at oil, starting to reverse course, it saw a nice kind of 4 or 5 day bounce here off of these lows at 925. Now we're getting a bit of a sell-off here, 3% down day, 8 and 20 bearishly aligned. Momentum's been to the downside. Looks like a pretty good, kind of pullback entry here in this downtrend. Perhaps going to head back down, retest these lows down here right around 920. That's certainly the mark. That's your near-term reference point. If you're bullish or if you're just looking to play the ranges here, I think, that's just a clear kind of obvious spot you'd want to see if buyers show up in USO. Natural gas also turning to the downside here, breaking below support. $7.95 is held for almost 2 months, going all the way back to mid-June, and we finally started to break below that after a nice kind of breakout move higher throughout June. So a little bit of a concern here. If we go to the weekly chart, you can see starting to put in a little bit of damage. We're going to need to see if the bulls can kind of stabilize this price here at the 20 period EMA on the weekly time frame. That means that we wouldn't really want to see any more forward down progress to the downside. We'd want to see him trying to step in here and try and close us higher on the week, so keep that on watch. You could get some type of reversal trade if all of a sudden we do kind of surge higher tomorrow and get a ramp back above 790. Maybe you just have a little bit of a kind of a washout pivot low to work against. Something I'll be keeping my eye on, not playing for it, not anticipating it necessarily, but just being aware of what could happen there. And finally, actually I think we covered everything. UUP, we'll look at that, the US dollar. Kind of coming to the bottom end of this channel here. If you extend it from the May lows, you can see if we extend it back out, you can see we just kind of channel inside of a channel here, right? We got the bigger, larger consolidation at work extending from the 2015 highs, and then you also have this little kind of mini channel we've been in for the past several months. We're at the lower bounds of it now. Perhaps if we break down, you get a trade to the bottom end of this bigger channel. Just some things to think about. Not a trade that I'm looking at right now, but might be interesting to you if you're into that market. Now, getting into some of the sector analysis, there's still a few bright spots here. I think semiconductors still very much a bright spot. I know it sold off today, but look at this, still been just ramping higher here. A lot of momentum, a lot of energy in this space here. So semiconductors still look good above the 8 period, rising strongly 8 and 20 period. That looks good. XLK, same thing, technology also looking good, sold off a little bit today, but still a bright spot, all things considered, in the market. I'd actually still consider financials a bit of a bright spot here. I know they got hit a little bit harder today, but as long as they're above, this trend line that's extending down from the 2015 highs, and also importantly is this recent consolidation here. So I'd say like right above 2370, 2375. As long as we're above here, I think we're healthy. Again, we're not far, it's only 30 cents away, so the ranges here are very tight. We've discussed that why, in the beginning of the top of the video. But as long as we're above here, I'd say, financials are still potential, still a bright spot and still could lead us higher here. So just keep an eye on it. If we start to break through these levels of support, then you'd have to be a little bit more concerned. On the downside, on the laggard side, XLU continues to just sort of kind of look weak here after breaking support last week. We talked about it. It's continuing to stay weak here. That's sort of a sore spot right now in the market. The XLV is giving a little bit back now. IBB in particular, biotechs have had a great run all the way from the July lows here, going from 240 to almost 300, so 60 points in the IBB. It's due to come back. It's coming back in and retesting this kind of breakout level. This is pretty much healthy action, but we just want to keep an eye on it. Down 2% today is a little bit sharp. It's coming coming down kind of fast, but let's see, if bulls can kind of step in here and catch it and buy it up. XLE also getting hit today with those slamming kind of oil prices. XLE coming back down, very flat period, 8 and 20 period moving averages and a larger consolidation. This just certainly needs more time with XLE to see what way in a more broader sense it's going to start to break. And then everything else, XLY, XLB, XLI, they're all neutral, potentially vulnerable, but they're all just kind of moving around sideways, not doing much wrong, not doing a whole lot right, and we're just kind of waiting to see what's going to happen with them. If we get into some of the individual names, Apple has still been kind of a rising star here. It's pulling back a bit today, but look how far it is above the 8 and 20 period still. There's been a lot of momentum in this. We did break above this trend line that's extending from the 2015 highs. So you got some momentum coming in there. The MACD on the weekly chart curling up for the first time, really since the mid 2015. So it's been a solid year. That's constructive there. So Apple continues to get some play to the upside. That's constructive. Google also not doing a whole lot wrong. We're long this. We talked about our entry in this a few days ago. We're still hanging out here. It's not as exciting and exuberant as we may want to see in this kind of trade, but at the same time, it's not giving us any immediate sell signals just yet. If it starts to break below 800, take out some prior support, something a little more significant, we'll change our tune and exit or tighten our stop or whatever we need to do. But for now, Google's still, kind of on this path higher. 8 and 20 still firmly raising higher. Amazon, kind of the similar situation, maybe a little more dull here, a little more sideways with an upside bias here. But Amazon, kind of the same thing, not doing a whole lot wrong, not doing, a good job conviction on the long side either, and it's just kind of in that wait and see kind of which way does this want to break when the energy returns. Twitter is something that has been rising, has been working, and it's continued to impress here. Of course, Twitter had its earnings gap, disappointment, down 15% on its earnings day, and that was the bottom, that was the washout. It's basically done nothing but straight up since that day. It very quickly filled that gap, and now it's testing with some very big resistance. $19 has been the point where we failed back here earlier in July. We failed in March, and this has been a trouble spot for the stock. You can see the 8 and 20 MACD finally curling up here on the weekly time frame. So you're starting to get some commitment here, some accumulation, signs of stabilization here on the lows in Twitter. That's constructive. It's been up, 9 days in a row, coming into a big $19 level. I don't think I could buy it here personally, but it's something that's, starting to be on my good list, right? It's now, kind of converting from the dog that it's been for the past couple of years to, or at least the past year and a half, to now something that's a little more interesting and potentially buyable on pullbacks and breakouts and all of that stuff. So keeping an eye on it. I don't see a setup here just yet. I do want to see it above $19. That's where I start to get a lot more interested in it. Alibaba also pretty interesting here, 2.5% surge. This might have earnings coming up today, tomorrow, soon. I honestly don't know, but this one, we talked about this as it started to break above the $80 level. I think we had a trade in this as well, made a little bit of money if I'm not mistaken, and Alibaba has continued to work really since it emerged higher above this $80 level, broke this downtrend line, and it's getting above a lot of this major overhead supply, so that starts to look good there for Alibaba. And then finally, let's just end with Netflix. This one's consolidating here. Daily chart, you can see it's just about flat on the day. It's had 2-3 days of downside movement, but it's attempting to sort of get above this big kind of major significant downtrend line that's been in place that extends from the all-time highs late in 2015. Notice Netflix is getting pretty tight up in here between $85 and this downtrend line. Something's got to give eventually here, so we're going to have to see, can this get a nice pop above $97 and then get above $100? Then it starts to look real constructive again. But just keep it on watch, something that's tightening up and could be interesting here in the near future. So we'll end there. Thanks everybody for watching. Hope you're having a great week. As always, thanks for watching, and I will catch you next time.